Hey guys, welcome to Monday, the 11th of April 2022. And we are on the brink of a quite pivotal French election with Macron leading by the hairs of his chinny chin chin ahead of Marie Le Pen. So, obviously, we're listening to some rhetoric here on Bloomberg this morning, and indeed, as Francine Lacroix quotes, it would be an earthquake for the European project should Marie Le Pen pip ahead and get this election. Of course, we have to really wait until the 24th to have the runoff complete. So, while we wait for this, and markets do focus on this quite a little bit now, more than the Ukrainian situation. The markets are kind of hanging around an interesting area on the equities front. I think, bonds here now in Europe, the bond down to its low of day. A lot of commentators are talking about 3% on the 10-year yield in the US by the end of the week, currently at 2.7%. Why is this important, Tim? Why do we care about the yield on the bond? Well, if you're getting 3% on the 10-year, you're not, for very low risk, you're then going to look at your equities portfolio, like the Nasdaq, for example, always, the hottest, most volatile of the equity portfolios, I would say. And you're going to say, you know what, I think I'd rather get 3% on the 10-year than whatever percentile I'm getting on the Nasdaq. So traditionally, you do see, once the yields creep back on up, you do see a little bit of a flight from that higher risk portfolio in the Nasdaq. So got to keep an eye on that. Meanwhile, we've been talking about the inverse correlation between the yield and gold. You're seeing now, as bonds are printing lower. I haven't looked at T notes yet, but you're seeing gold getting back up here. We're up about $13 on gold right now on the CME. Just want to get that. Well, I'll pull up the chart in a second. So yeah, just a couple of broad strokes there. This week I'll only be on for 2 of the 5 days, with of course Good Friday this Friday, and off the desk for Tuesday and Wednesday for some personal reasons. But yeah, so really very light on the data like this week. I mean, you are seeing out of China, you've got inflation and higher CPI prints. Unfortunately, the consumer basket in China is getting really out of hand with the lockdowns that they have in Shenzhen, Shanghai, Beijing, all in major lockdowns. So let's get over now. I'll stop the chat and let's get over and have a look at some of these charts. So as you can see, from gold, which is now going to live in the bottom right of our screen, um, gold this morning, just in the last hour, just getting on up here. So target on the upside is going to be 81 spot fours. I mean, yeah, you could look at the highs of last, I think it was Thursday here. I think that's just going to be a bit of a formality, 72s. Um, so, prudent place to take a little bit of risk off, but 1981 definitely more interesting target. And then, of course, your psychological 2000 hand above there. Looking for the longs. Well, I mean, really, I would not suggest getting in right now. If anything, I'd be fading a little bit of this strength. But well, if anything, gun to my head, I'd say pull the trigger. I don't want to trade it. I just take the bullet. So, looking across on the US equities, right, you're seeing NASDAQ down 1% at market. And quite key because really we've had such a key breakdown here on this line in the sand. You can see here, it was just, if I go back to the 60-minute on this thing, right, last week, um, we were all trading this. It was absolutely horrible conditions in the Dixie, or sorry, in equities in general. But you can see here, it was just such hard work getting down through this area for the market and then snap through. And then look at the big bid back up out of here. Eventually, we came back down and revisited this Friday. Again, snapped off of the low, the prior low of day, which was Thursday's low at that time, snapped back up. And then again, just late in the Friday session. coming down, down, down through this area and closing below the kind of line in the sand. And of course now, well, a lot of stops being run and people getting now short this market. Look, I wouldn't rule out a pullback to, last Thursday's low or the line in the sand 14,370s, but I will be looking for shorts against that area down 14,045s. If it doesn't trade in the European session here, it will, to my understanding. I'm looking for this thing to trade today for sure, easily on the downside. You are looking at daily bars here from this. So, um, you know, apart from that, I don't really want to call it as to when we're going to be back down on 12,939s, but not ruling it out. And I think, look, I mean, I have talked about higher highs on new highs on equity by the summertime, and we are going to need to find the buyers for that lower. So the quicker we can get out and away with the flush down, the quicker we can get back to all time highs. So, but for now, we are bear trending. We are sort of trending down right now. Really big interaction here from the 200 crossing below the 100, or sorry, the 100 crossing below the 200 EMA. I talked about that at length at the time and how we should really watch out for that. So, you are seeing that follow through from the swing traders, basically, who love to just, short that type of that market. All right, on the SPOOs, squawk out of my ears. But thank you to the guys in squawk essential service for sure. So yeah, all right, we're trading the highs of, or the high of the day, 27th of September 2021, right now on booze. Is this going to be the major support that holds us up? Well, I don't think so right now. I think we got a trade below, and that's going to be 44.10s quarter. That'll be the high of the 3rd of May this year. So do watch out for that to trade. And I think it's going to be scant support for a market that will be downtrending at that point. For me, I think the interaction we've had up here. Well, I don't want to call the market or look at the market beyond that low of 44.10 quarter at this time. Am I a buyer? I'm a buyer. So back down, and the Dow. I mean, It's 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 a lot. You have a lot more quality in here. You've got a lot more dividend. This is not really the indices to slum it. I mean, you are going to be in good company here in the Dow. So should we sell off as quickly down in this as we would in the Nasdaq? Absolutely not. Um, it's kind of speed wise, it goes Nasdaq is sort of high volatility, Booz is in the middle, and Dow is sort of the daddy of them all, right? So I think 34 237 support below. I think the 50 EMA or a 50 weekly here. I go back to the daily chart. So probably get average there. So I think 34 237 support below, and if we breach 34,031, you're opening up. Really, you're opening up new lows on here essentially for the Dow. So it's a matter of how long is it going to take to go down there. I think the stat is markets go down 70% faster than they go up. So just keep that in mind. And oil. Well, oil on the bigger picture, oil is under generally, you know, 180 million barrels out of the US, 120 million barrels out of other member global states. I mean, it's just hard to look for the higher prices at this time. The longer picture is that they're draining the SPR, and this is bullish, but over a medium term, right? We are looking at charts here on the short term, and on the short term, this is bearish, right? We can look back to the November period here, whereby we had the 60 million barrels come in here, and we went off what 10. $20. You know, at that, I mean, well, actually, let's calculate it. I mean, from the impact, we were 22% down. That was price difference of $16.80, right? So, now we've got 180 million barrels, three times that. We've priced in about 28%. So, well, let's price in 32% being, well, sorry, let's say three times, right? So let's say 48%, probably a pullback down to the $80 will be just working some simple maths on it. So I think we'll pull back on this trend just below 89.98 when it's all said and done. And then let's see if we can find the support there and the market prices in the actual medium term scenario at that point. But for me, I'm short until this thing trades lower to 89.98, find some buyers. And that's really it. I mean, you got the 19 or 2009 low at 94.77s to be aware of. Below that, you got 92.62s, and then you're into that area 89 spot 98. Just call it 90s. Shits and giggles. Um, all right, what else have we seen here? Gold continuing with the upside as I've been talking. Euro back to 1 spot 09455's resistance should be found there as this dollar hits on target to the upside 100 spot 38. I'm pretty sure that that should happen this week in the first couple of sessions. Um, that's it really. A little look at Nat Gas. We've had really good activity here on Nat Gas. I'll go out on bars. We have time. There we go. So we've hit the top of this range we were looking at. 6 spot 481s. Easy peasy, right? And I think now, yeah, we could retrace a little bit down. 5 spot 992s would be a target on the retracement. But generally, I think what's happening here is we're pricing in for actually $7 and above. 6 spot 789s is going to be a biggie. I can't show you, but that is a historical high level. So these are of course, the highs above 7 spot 131, the highs of 2018 on gas there. Okay, so that's it for me for another session. Pre-US, I'll see you in Discord. Please do click the subscribe.